Hello guys, welcome to the Trading Parrot. As you can see, yesterday we had a pretty bullish close for stocks, with a few exceptions including Tesla and Walmart. Most of the big stocks were in green, including some small ones as well. Pre-market prices on Nasdaq and S&P as well are testing those all-time highs. So of course the question is Bitcoin gonna be next? Let's do a little bit of technical analysis on lower time frames to see what's going on now that the options have expired and settle, and there hasn't been any excessive volatility after that. But the order book is indicating some things that we should bring to our attention. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And as I promised, I put public the Timeframe workshop episode 1, which originally lasted over an hour, but we compressed into 40 minutes so you can watch it quicker, spending less of your valuable time. If you want to be part of these private live sessions, we do one every Thursday at 3 p.m. UK time. Next week, we're going to have a private Altcoin TA, and every last Thursday of the month, we will continue with episode 2 of the Timeframe workshops. You can join as an elite member using the Patreon link in the description if this is something that interests you. So yeah, all across the news, there are mentions of the Bitcoin option expiring, the max pain level, the expected volatility, the potential for a gamma squeeze, and all of that. It's always fun, but we have covered this topic multiple times, and multiple times really nothing really happens. Sometimes right after the options expiring, which was 8 AM UTC, we see some new developments on the price. After all, there was a lot of selling pressure right above the price, and that's why I'm so curious. So stick around with me until the end of the video so we look at those orders and see if really something dramatically changed. Something that is new today is that the Federal Reserve has decreased their balance sheet just slightly in here. This is the new reading that we have of $3.33 trillion from 341. That is a small decrease. So for those of you that are expecting quantitative easing, this is a small turn in the wrong direction. Nothing significant. We're just there in the middle of a flag. Liquidity in China is slightly increasing, but this indicator is always all over the place. Sometimes it peaks intra-candle and then it comes back down because it tracks multiple sources, and those sources are updated at different times. So really we need to wait a couple of weeks to see if this is really the case. Of course, global M2 continues the trajectory to the upside, but there hasn't been major influx of that liquidity into crypto necessarily according to this indicator, at least not yet. On the aggregated open interest, thanks to the recent moves that we have, we are still within this one bull flag that could break out to the upside and continue, or two, the breakdown from the ascending sloping trend line. So I'm really looking into this to give us a clear direction of what's coming next. It was looking like a breakout, but now it's below the breakout. If we place it properly, well, it's very difficult. It's a gray area still. We still have the CME gap at 106. These moves in there are extremely narrow, and I still consider this a bull flag that has a decent chance to pinch liquidity right above if we can manage to push away all the selling wall that we still have. Bitcoin status looks the same. Remember that these slides, you can ask me for the link inside my Patreon community. I'm happy to share it. There is no changes whatsoever today. On the 4-hour time frame, yesterday we left the RSI in the middle of the range in here, in between 75, which is the top of the range, or the support of 55, and overnight we came very close. Indeed, we touched the yellow line while we were sleeping. I have telepathy with the charts, so I knew that it was happening. I needed to turn in the bed because it gave me itchiness as we were testing support. 106.6 is this yellow line, and then later 106.7. So we have already tested the yellow line 2 times in a stealth mode, and now we are battling between losing or reclaiming 107. Interesting that we started seeing this move down right before the options were expiring. kind of pushing us towards that max pain, but not necessarily doing much progress. After all, the max pain was around 102. So if I was to make an interpretation of that, I will say that the bulls must be really strong to bend the hand of market maker to still keep the price at 107 on the close of Friday, despite the fact that max pain is 102. That means that they are not allowing the market maker to cash out from most of the option traders. Fair enough. Neither to break the first line of defense in here. Currently is an RSI of 53, so let's move that line. There you go. So now our support is slightly lower at 106.476. It is a moving target anyways. We already took the fair value gap that we were talking about. Thanks to the retracement and getting very close to support, but not yet losing it, the bulls still have a decent chance to hit the highs. Now from this retracement, the spring is collapsed, therefore it's got more energy to go higher, and as you can see, the RSI now is almost 111. So if we were to use the bull flag to go up, if we found that strength any point in time, ideally before the weekend, so we don't have a pump that produces a CME gap, of course. If we do it today, before candle close, that will be fantastic. Imagine closing Friday at 111. That means that we are meeting with the first red liquidation level in here. That includes all the degens, right? 25 to over 100x. If we went beyond that, then we are tackling also the 10x's. Even conservative people are gonna celebrate losing their accounts if we can get there. And that's why I wanna see as soon as possible that order book to see how we are placed for that. So we got new developments on the daily time frame as well. As you can see in here, if we focus on the volume profile, you can see that it has been moving to the upside. That is because we have spent a fair amount of time in the top of the range, and therefore the volume profile keeps tracking that. And the top of the range now is 107, almost 0.5, and that leaves this move up no longer in the breakout area. Interesting. This green candle was in the breakout area, but is no longer part of that. And instead of that, if we focus on these candles, you can see that now we are in the territory of the rejection. So we really need to use that bull flag on the 4-hour, retain it as a bull flag, and don't let it puke to the downside. So we have the best chances to reclaim that 107.5 and start heading for new all-time highs. If this becomes a failure, we have a support at 106 on the daily. That is the confluence of the RSI levels I'm going to show you in a second, plus the anchor VWAP from the all-time highs, this time anchored in the daily chart. Daily is still in the context of a healthy breakout, forming the first pivot low. There is no fake out in here, but we need to move that support, unfortunately, a little bit lower, because we cannot really touch anymore 52. That is around here. We need to go into 50 to test support. So let's update that. And support is not at 106. That is just the anchor VWAP. Support is actually 105.2. So even if we go into 105.2, we are still just retesting the breakout. No red alert. We could say yellow alert is if we lose that and we start going into the next support in here, which is 3866, located at 100.451. At that point is a yellow alert, because that, if it breaks, can take us into 25 support, and then we are talking about 88.7k. So we had the bullish cross on the daily, that is confirmed. Now we need to see if it's actually gonna help us getting out of any potential trouble. On the weekly, we are retracing a little bit, but not enough really to sound any alarm. If we were to close like this, it's very bullish in my opinion. I've been saying that anywhere above 104.4 on a weekly close can be considered really good, particularly if we are above 105.5, because at that point we have a green engulfing weekly candle. Think about that in this area right next to the all-time high. That is really promising. Below 104.4, it constitutes a rejection and higher likelihood to pay a visit to the old bull market support band, which is currently starting from 97 and ending at 95. The monthly time frame is very happy, and considering that we are at 27th of June, a close like this again is extremely bullish. On the Bitcoin status, if we manage to close the week where we are, I'm gonna turn it back into green. Monthly is already in the green. Daily and 4-hour are having to fight their battles to prove themselves, so they're gonna remain in the neutral. We've spent most of the week with a leverage squeeze sell signal that has stopped now triggering, but it's a low quality one. We had yesterday confirmed the capitulation signal from hash ribbons. People are starting to make fun of this indicator on social media, saying that some miners are even unplugging the cable just to appear in the news and then plugging it back again to trigger signals. Some others are saying that this was a result of the bombing that happened during this week. No changes on Crypto Quant in terms of the metrics. We have few retail. Future average order size belongs to retail orders. There is no sign of a bubble or anything like that. Long-term holders are cooling down in this area, not necessarily accumulating at the same pace they used to at the beginning of the lows. We continue to have new inflows on ETFs spot, no longer in the territory of the 500, just 200 as of yesterday. We'll see what is their next move for Friday. And we are no longer about to get in extreme greed. We are back into just greed at 65. So looking at the liquidity objectively in here, we have on the 15 minutes this parallel channel, horizontal, that is definitely attracting liquidity on both ends. Let's see who are new in town. On 100Xs, we have some liquidity to hit if we go to 109. Yesterday, we observed a double bottom on the 15 minute that trapped a lot of traders. It played out as a liquidity hand. You can see that it broke out. It went almost into 108 just to put a new low at 106.3. They got trapped, so they probably got hit right there, particularly the 100Xs that enter at the bottom of the flag of the double bottom. And we continue just rinse and repeat to bring new liquidity at the close proximity from 100Xs and 50Xs. If we combine both, we can say that 109 has the biggest pull at close proximity to that channel coming from Degens. So there is probably a preference when it comes to what is easier to do to go and hit 109 or 111, which is very heavy but a little bit further away. If we put everything on the table, yeah, of course, liquidating shorts is the most attractive thing that we can see in this proximity. In the past 3 months, this is how it looks today, peaking at 113 at the moment, and in the last 30 days the biggest cumulative liquidation pool is 109 still, but we are getting a second contender in here that probably, if we aggregate all of this, it gets very close to what we have at 109. This is 103 to 102.9, but it's further away from the price, so it requires some additional cash for them if they wanted to force the market into that liquidation compared to going into 109. And that is something that is really calling my attention. Since we have all that liquidity so close right above the price, why do we have such a selling wall? Is it that they are protecting their sells? Do they have a large position that belongs to the market maker? Because so far I see a lot of defense to not get there, at least not yet. And I would have thought that that was coming from the options expiring, but they already expired. We're back into funding rates in negative across the board. You can see it in here. That means that there are a lot of shorts. We can confirm that from both long and short term. Below the price, we see very little number of longs. That is all consistent. There hasn't been major liquidations in multiple days. The last one was shorts on the 23rd, 4 days ago. So we should have a little bit of fun over the weekend. Are you prepared for seeing some decent liquidations? Who do you think is going to get liquidated next? By looking at this specific chart. Let me know in the comments. I really appreciate, I've been checking on Telegram and there are loads of conversations from the hardcore fans of the channel on commenting a lot more frequently in the videos to help the channel really to get somewhere, hitting the likes and all of those things. I really appreciate it. I will just disencourage you guys to attack other people, because you're gonna get yourself in trouble. YouTube is gonna ban your account, and then you won't have an account really to comment on my channel. I will say, if you can encourage the conversation and the engagement around topics that are related to what we are talking in the video, that seems legit, and at the same time it helps massively the channel, because the algorithm currently is definitely configured to not show these videos to anybody, at least not to anybody new. And even people that have been for a long time in the channel, they're not getting notified. They tell me, I don't get any notifications. I go into the YouTube landing page and I never see your videos. I have to search for you, which is really disappointing. It takes a lot of effort to put all the content, and YouTube hides it, literally. So keep hitting that like and write down a comment, unless you want a slap in the face. Right, let's not get violent, and let's go into the order book and let's see what these bastards are doing. 110K has 45 million in liquidity. Let's observe that. That has been the case the whole week. 109 has 29, and then below that there is not much more. Brown whales, which are pretty large whales, as you can see in here, 1 million to 10 million positions, are adding to their position. That is very interesting, because we can see also that the purple are currently dumping into the market. The small fishes, the losers, from $100 to $1,000, I mean, no offense, but those are the ones that get wrecked constantly, at least in average. They're also going sideways or slightly down. So we got that situation where very big positions are pointing up, and the leading ones, the purple ones, are actually dumping into the market. There is a balance between aggressive buyers and sellers at the moment. We have most of the liquidity sitting above the price. You can see in here where it's precisely located and what are the sizes, or market monkey terminal. And we have something really unusual happening on a Friday, which is a very decent amount of ask, if you ask me, which is 0.2 to 0.19. Let me magnify this so you understand what are we talking about. We very rarely reach these levels of ask within the 5% next to the price. That is the ratio that we are using in this chart. And in red, you can see when we hit more than 0.15. That typically leads into a local top. When it happens within a pump, within banana zone, it still pushes the price slightly lower, but then it continues up because it's banana zone. But in normal circumstances, sideways or bearish, it is most of the time a local top, like here, here, and within all this area, we haven't had a single one. This one stopped the price, but it went higher. So my question is, what is going to do this to the price, given that it has already retraced, given that we are entering on a weekend, given that on Fridays we tend to have positiveness in the price, at least in the past weeks. All I remember is a Friday rally. Given that the options didn't do anything to the price, is the new moon gonna do something to this? Well, let's continue this forensic analysis. And we can see that the funding rates just exit the negative back into the positive. So we have some longs entering at these precise lows, and the longs are slightly entering, but not that much. So from 34, we went into 35, 36. So that lack of interest from longs is really interesting. Let's look at all the deviations of bid versus ask to see if we got a good proportion of limit orders below the price or above the price, to speculate what is the actual sentiment in the market at the moment. And you can see 5% below the price, the percentile is just 6. It's one of the lowest we have in all of this range of interest to buy that 5% below the price. 10% below the price, we are at a percentile of 5. So really no interest in buying that dip, at least now, or there is a lot of sell orders causing that the ratio goes that low in the percentile. Where we have kind of a balance relative to the past 2 weeks is on the 1% of the price. At that level, we have kind of equivalent up and down relative to the past 2 weeks. Liquidations remain around the 800k, putting the longs at higher risk in the close proximity. And I'm starting to doubt these numbers of high block capital because, well, if you remember, we are seeing it in here. It is the shorts. So maybe high block capital is just considering this range. It cannot be because there is nothing in there. Anyways, we are still not done with the fair value gap at 106, neither with the CME gap that we left right there too. There is just a few $100 left to complete it. And as I say, general markets are looking really strong on pre-market prices and on the closing price last night. You can see that S&P on pre-market is 613, and that is higher than this high in here. The high in here is 613.23, and the pre-market is 613.46. So we got an all-time high on pre-market price on the S&P, at least on this symbol. This one is still not open, so we cannot see price action yet. On Nasdaq, we close at 22,447, and currently we are at 22,518. So we continue in the territory of the all-time high. Ideally, we want to close on Friday just like this. That should transfer the attention into crypto assets over the weekend. Maybe someone hedging taking those profits and moving them back into crypto. That is really needing some love in the past few days. It's been just in the red and not taking advantage of any of the upside that we are seeing in general markets. And speaking about altcoins, on this channel, on the USDT dominance versus the total 3, if you've been following my channel, this is the channel that we were into in the previous cycle. This is the channel where we are in this particular cycle. And of course, we don't want to exit from here because that calls the bear market. We are in the perfect bounce of 28 for a weekly close, defending, staying inside the channel. Staying inside the channel means we stay still in a bull market and we still have options for the USDT dominance to fall against the total 3 and have some sort of altcoin season. And of course, we cannot talk about altcoin season without looking at the Bitcoin dominance, which you can see that my call of going into 71.81 at the top of this channel, the top of the range, we have already done that intra candle, at least almost there. You can see if I magnify that intra candle, we've been about to touch that 71.81 RSI weekly. Now we have an indecision candle. It still looks very bullish. Let's see how we close the weekly candle on dominance. At least in terms of volatility, this is calling already for a top. On the RSI, momentum is calling for a top of the range. So when are we gonna get that move back down? The USDT dominance has already moved back down following our fractal, but not yet to the final destination of around 4%. That move down should give space for the altcoins to perform. Guys, if you want to trade $500 for free, then consider my position airdrop. Just find the link for Bybit in the description, open it and click register to claim. There's still 3 days to take advantage of this. $500 to trade any of these coins and get to keep all the profits that you make. Thanks so much for watching, and I really appreciate that like that you forgot to hit and that comment that you forgot to write that you're about to do. I'll see you in the next one. Bye bye.